Hello, Samera here. Now, in recent months and years, I've been working with a lot of dental groups, some small, some quite large, and some that are growing at a rate of knots. And there are some commonalities that I see where they're just doing things wrong from a financial and accounting perspective. Now, people grow groups for a number of reasons, but one of the reasons is to acquire practices or build practices and then ultimately consolidate them together and ultimately sell them for a higher value. And that's a great idea, not a bad idea at all, and one that some owners have made very, very good returns and good money on that. However, what I've seen with many groups is that they start wrongly and they do it wrongly. So if you're going to do a dental group or build a dental group or dental service organisation or DSO as they're known as, you've got to make sure you have the infrastructure right for your financial accounting and your records. So what do you need to do? So the first thing is, if you're going to start with one practice and grow from it, you need to make sure you have each practice separated and they're bookkept properly. So when I say bookkept, you don't leave it 3 months or 6 months and catch up with the invoices. You're making sure that everything is bookkept to the penny, the income and all the expenses as well. Now, you should be using a cloud-based solution, something like Xero or QuickBooks. That should be more than sufficient. But most importantly is to make sure you've got bookkeepers who actually know what they're doing. We've seen it so many times when bookkeeping is done, but they're not actually bookkeepers, it's just the admin assistant doing it. They don't really know what they're doing, and hence a mess is created. And once a mess is created at the beginning, that mess just gets bigger and bigger as time evolves. So it's so important to make sure you've got qualified team members or you're using a firm that has the right people to actually do the bookkeeping in the first place. In addition, you might think, well, hold on a minute, you're building a group. I've seen groups where there's partnerships, where there's sole traders, they're limited companies. Again, that's a big no-no, a big mess. You want to have a structure in place where you might have a holdco and you have separate companies underneath it and everything can be consolidated upwards. Because ultimately, that's what a buyer will want to buy. If they want to buy a group, they want to buy that topco company. And if they buy that topco company, it's much easier for them rather than having a mishmash of partnerships, sole traders, LLPs and companies. So really important to get the structure right. From the beginning, else the value of what you sell will be a lot lower than if you had one neat package. In addition, I think when you're doing the bookkeeping on a month to month, the key is then to consolidate that information to be able to see line by line which practice, which organisation, which clinic is doing better than others, and then you can make judgments, decide what to improve and change things. Now you might be thinking, well, this is going to cost me a fortune. I'm going to have to invest in head office costs, accountants, bookkeepers and everything. Correct, you would do, you need to. But if you're going to scale and you're serious about it, you really need to have the right advice to do that and to do it properly, because any serious investor will want to see clean accounts, clean information presented in a way that's actually going to help them make a decision whether they're going to buy it, and secondly, whether they're going to pay you a premium for it. And that's where the big difference is. I've seen people have a mishmash of accounts in their group and they manage to sell it, but they don't get the premium that they should deserve if they actually spent money and time in actually organising their affairs properly and having a proper structure in place for for taxes, but also for the accounting and all the bookkeeping, so they can see management accounts. Now you want to be in a position that, let's say a random buyer came along one day and they said, I want to buy your business, and they can look at the information pretty quickly and make a decision, say, I want to buy it and this is the price I'm going to pay you. If your affairs are in a mess, no one's going to buy your practice or buy your group, and therefore it's not as valuable. So how can you do that? What do you need to do to get all your affairs in order? Well, as I said, we've been doing this for a number of years for a number of groups. Some have gone on to sell successfully, and some groups are building and evolving and developing their internal financial structure as well as we speak. But one way that we do that, we have a global capability centre of our own that supports dental groups and DSOs based in India. It's our team who are trained in understanding all the issues and nuances of dental groups and dental clinics. And obviously they know all the accounting softwares that are needed, such as QuickBooks, Xero, etc. And then all the tools that can bring it together for management accounts and reporting for you to make better decisions. But more importantly, if you're going to sell, for a buyer to make good decisions based on the information presented to them. So in essence, if you're serious about building a group that's successful and serious about getting the best value, it's so important to get the accounting and finances right from the beginning. Now, if you need any help, get in touch. I'd be delighted to help. And my team are there ready to support you, based here in the UK, but also our capability centre sitting in India, just for DSOs and dental groups. Thank you.